Good morning. Welcome to Stock Market Today. It's Tuesday, February 2nd, 2021. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. That hits your inbox every trading day before the market opens. So U.S. equities were higher in Monday's trading, led by the Russell and the Nasdaq. All sectors were higher on the day. Treasuries were actually stronger across the curve, and the dollar was better. I mean, everything was up. Everything that could be up was pretty much up yesterday, except for GameStop. Gold finished up 70 basis points. Silver finished up 9.3%, as that was the latest target of the short squeeze crowd. I'm ill-informed as it may be. WTI crude settled higher by 2.6%. At the sector level, discretionary tech and REITs outperformed. Staples, healthcare, and Utes lagged. But as I said, everything was higher on the day. As we get to the desk this morning, futures are up 80 basis points after Asian equities were higher overnight. European equities are also seeing big gains. Treasuries are weaker with the curve bear steepening. The dollar is firmer against the yen and euro. Gold is down 90 basis points. Silver's down 6.2%. A little bit of a thanks for playing. WTI crude is up 2.6% after gaining 2.5% on Monday. That's the framework. That's the backdrop as we head into Tuesday with a little bit after a rebound. And for those of you who read my notes and take or have taken the trial and you see my notes, you know that yesterday I was talking about the fact that forced selling on the part of hedge funds created an opportunity. And if you knew where to look and if you knew how to kind of navigate around 13F, there were opportunities out there yesterday morning. What's interesting is nothing's changed from a structural standpoint. Support in the 360 to 370 range, then 340 Qs, 300 is important. In the near term, IWM 190 to 200, right? So the trend is up until proven otherwise. So it makes a ton of sense to continue to focus on everything we've kind of been focused on for the past little bit of time here. For the past few weeks, we've been talking a lot about what's happening in the marketplace and some of the trends that are in place. And we want to kind of just continue to focus on those trends. Obviously, there's going to be some puts and takes. There's going to be some back and forth, but the trend is up until proven otherwise. So let's continue to focus on the trends at hand. Let's continue to focus on leading areas of the market, whether it's at sector or industry group level. Let's continue to focus on the best names within those groups. You want to carve out a little bit of money and play the, short squeeze game. Hey, who am I to tell you what to do with your capital? Do I think that that's a sustainable strategy over the long term? No. You really think the hedge funds aren't going to smarten up? Never mind the fact that if you look and actually do the research, highly shorted stocks tend to underperform over time. So it's actually a factor in our model. One of the 20 factors in our stock model is short interest. And the higher the short interest, the more bearish that is, becomes a bearish factor for the stock. So, squeezes are the outlier. It was fun, I guess, for those who played it, but I don't think it's a viable strategy going forward. Let's get into what we're talking about today. Market in a minute. Nasdaq and Russell lead the charge in a strong Monday rally. Tech emerging as a leader once again, while energy has become an oversold leader. Discretionary is the only bullish sector. The only bullish sector is consumer discretionary right now. So that's kind of interesting. We're going to focus on the futures, which are higher ahead of today's open. Now, for the major indices from a power bar perspective, 8-4 bulls to bears for the Dow, which added 73 basis points yesterday. Taking a look at the S&P 500, 1.61 to the good, 130 to 72 bulls to bears there. NASDAQ, 2.5%, small caps, 2.5%. They were your leaders, 2613 bulls to bears for the NAS, 777 to 126 bulls to bears for the small caps. Discretionary, big outperformer. We'll take a look at discretionary on a relative basis a little bit later in the show. because we are going to hear from Amazon from an earnings standpoint. So maybe Amazon is a catalyst to get this thing up and out of the range that it's been in on a relative basis. According to the Chaikin Power Bar, small cap stocks are somewhat more bullish than large cap stocks. Major indexes are mixed. Tuesday, so we do a bullish screen. This one's pretty straightforward. I looked at kind of the four strongest sectors from a relative perspective. Comms, energy, tech, and discretionary. I say, give me the bulls and very bullish stocks. Give me the ones that are oversold with strong relative strength. Simple, straightforward, right? If you're looking for opportunities within the large cap landscape, you can do something like that. You can change the starting universe. You can drill down to the industry level if you're using the Chaikin platform. I just kind of kept it high level at the sector level, just because I'm doing sector relative strength in my note. You get 13 names that could be compelling ideas to look at, right? You don't just go out and buy them, do the work. 13 names. They're kind of interesting. A lot of semis represented. Target, which you should recognize. We highlighted it last week, and I'm using it as an example here today. Hewlett, L Brands. I mean, it's kind of an interesting group here. And then Exxon Mobil, right? Yeah, it's been a long time since anyone's had anything good to say about Exxon Mobil. But it's now bullish and it's now outperforming, and it might be something to pay attention to if you're a believer in this, energy emergence reflation trend that we've been talking about. So take a look at that. Some work to do here, and some opportunities to dig in on ideas if you're looking for new ideas, especially in light of the fact that if you're following along with my notes, we're getting closer to oversold. I mean, IWM is virtually there. Q's not quite. S&P almost, right? And now you had this kind of quirk where hedge funds had to de-risk. I thought that was an interesting opportunity, and I wrote about it yesterday. So hopefully you're getting the notes, and if you're not, take the trial. Head over to the sector movers over the last 5 days. REITs, only group that's higher, and we don't like to see that, but it is. Tech, comp, staples round out the top four. Kind of an interesting list. Healthcare, industrials, utilities, middle of the road. Fins, discretionary, materials, energy. So again, I wrote about it in my note last week. From a sector perspective, the reflation trade has become crowded, and it's giving some back. It makes complete sense. Everybody's on the bandwagon now, right? We've been talking about it for months. Everybody else is kind of getting on the bandwagon now. So that's fascinating. That's interesting. But okay, it is what it is. That's what happens. When you do the work and you're watching the trends day to day, you get to be early. And then when everybody else piles in, you get to, sound a caution alarm a little bit. No real change of view here other than to say it's crowded. Industry in focus, capital market services, past 6 months. Been a leader by about 13% over the S&P. Very strong power bar ratio, 27-4, bulls to bears. So that's pretty compelling. Very, very interesting dynamic at play here within the fins. A lot of back and forth. Remember, the earnings became a sell the news event, right? This, the sell the news event around earnings for the banks was kind of interesting. But remember, the group is broad, right? We want to take a look at some other names within that space, names like Ray J, Stiefel, Vertu, which are holdings in a fund that is neutral on the rating. Okay. But we are in an uptrend and we're outperforming. We're oversold, bullish money flow. So there's probably some opportunity here. 27 bullish names to look at that could potentially give you an idea if you're looking for some exposure within the financial space. And now I do think there's opportunity in the banks. I do. Remember, we talked about it ahead of earnings. I said, look, they're overbought. They're overbought in front of earnings. And earnings quickly became a sell the news event. And that's fine. That's how that should work, actually. Markets are discounting mechanisms. Market began to discount good earnings. Stocks ran. Earnings became sell the news event. I mean, that makes a ton of sense if you just kind of think about how markets work and market dynamics and everything else that's going on within the landscape and within the space. So makes sense that they pulled back the way they did. But there are opportunities out there. So let's find them. What's trending for yesterday's movers and shakers? Gainer side of the board, IFF merging with a unit of Dow DuPont, and that deal is completed. IFF up 15%, Dow DuPont down nearly 8%. Skyworks added to the IBD 50. That was up 10% on the day. Viacom, VIAC actually got a downgrade at Citi, but stock went higher by 7.9%. Xerox, nothing company specific to drive trading there, up 7.5%. And Corvo, QRVO, higher by 7.75%. Was Corvo on this list over here? Oh, hi there. They do report tomorrow, however, so let's be mindful of that. This is not a call on the quarter. Obviously, if you're running screens like this and kind of piggybacking off my work, make sure you kind of make it your own. It's not a go out and buy these stocks. It's a starting point. All screens are just starting points for you to do more work. I know nobody likes to do work, but you have to do work. If you're just going to buy Corvo and you don't understand that they report tomorrow, well, that's on you. Take a look at it. Loser side of the board, DXC rebuffed an offer, or a bid rather, from ATOS, stock down. We talked about Dow DuPont. Lumen is partnering with SAP on some HANA project. Okay. I think Lumen is a name that ran on short interest. PVH and WBA, nothing company specific driving those names. Let's get into it. Sector relatives. This kind of looks fascinating to me. XLE, as it dances with the 200-day moving average, right? We've liked energy here in the near term. It's worked. Now it's struggling a bit. We're going to have to see how it plays out. What are we looking for? Well, we want to regain the 200-day. Obviously, that makes sense. We don't want to dance. We don't want to sit here, keep dancing with the 200-day. We want RSI of the ratio to hold bullish ranges. So far, so good. You can see that as we've, after this positive divergence here, we've moved higher and we're holding bullish ranges, right? On pullbacks, we haven't gotten much below 40 at all. That's good. That's a shift higher in momentum. We want to see that, especially on pullbacks. Ideally now what we'd like to see is, higher high, right? We've got higher lows, higher highs and higher lows. We want to see that continue. And to me, once you kind of clear on a relative basis, if you clear this June high and you're not overweight energy at that point, I'm not sure what to tell you. I mean, the signs are there. The shifts are they play out over time. You don't have to, it's not all at once. You don't have to be paying attention to it all at once. But checking in and seeing this trend, I think it makes a ton of sense. Tech reasserting, I think this is important. The reason I think tech reasserting is important, especially into strength, which we saw yesterday, and if it continues, is because the S&P 500 went higher without tech. Right? We were trading at record highs back here, January really, when February just started, as tech on a relative basis was just chopping. So if tech breaks out and makes new relative highs, what is that? I have to think that that's bullish for the market, right? Or at least it's going to, especially if it's happening with an uptrend, i.e. tech is going up more than the S&P is going up. That becomes compelling. That becomes fascinating. RSI is still doing some work. Notice the RSI here. RSI of the ratio has not become oversold in, 2 years. Hasn't become oversold in 2 years. What does that tell you about momentum for tech on a relative basis? You think it's just going to roll over and die that easily? Probably not. Huge trend here. Huge. Above the 200-day. I think what happened was we got extended. 200-day needed some time to catch up. It did. And now we're working higher. I'm okay with that. That's how markets work. XLY, look at this consolidation here too. Same type story. Got extended. 200-day needs to catch up. We're holding bullish ranges. Amazon reporting tonight. Is that the catalyst? Biggest weight in the group. No longer an outsized big weight because Tesla's in there, but biggest name in the group. Going to be interesting. Take us for a test drive. ChaikinAnalytics.com/test drive. I'll be back tomorrow.